Bitcoin, again, is up into some resistance here. This 34,000 to 35,000 is resistance. If we zoom out on the chart, we can clearly see where that resistance is coming from. All right, so let's do that right now. So you see this pivot low here, okay, and bear with me as I still have to get that thing out there for the drawing tool. Right there, and that's where we're currently trading. Now, again, great move on Bitcoin over the last couple days. For those of you that have been following me, you knew I was long. As I said yesterday, I got out a half position around 31,000, the other half at 34,000. So again, I've moved out, and now I am inching in a very tiny toe in the water on a short right above 35,000, playing this level essentially. Now, if it goes up to this next level, the next level of resistance is going to be right up in this 37,000 level here. So that will be, if we continue up, 37,000 will be your next resistance. The one thing I will say is the RSI on the daily is very overbought, so just be aware of it. I also think that Bitcoin is now factoring in the ETF, the spot ETF approval. So all the buyers that are rushing in now, if we zoom in on the chart, this is all buyers anticipating a Bitcoin spot ETF. The question is do we get a sell the news event? The more we rally higher, and this is another key lesson, the more we rally higher on Bitcoin, the more likely when it's approved, you may see a sell-off. You'll see an initial reaction like boom, and then it may come back down. Remember what happened on the NVIDIA earnings. All right, NVIDIA was running up into earnings. All right, we go to the last earnings call, right? In fact, here, let me just go here and I'll show you guys. Okay, so we know the NVIDIA daily and weekly chart was already overbought. This is your gap up on earnings, and that was the highest point since then. Now, you might say, well, what's the factor that makes this comparable to Bitcoin? This is a stock. Why is it comparable to Bitcoin? It's because it's human psychology. And human psychology, again, is that you start anticipating, you have a run on NVIDIA from $400 to a gap up to 500 and change, and the run had already factored in the amazing earnings. And they were amazing earnings, and therefore it basically sold off. Look at this sell-off back to 400 after earnings, even though the earnings were fantastic, amazing earnings. And so the same thing can be applied is while it's not earnings, it's humans buying on anticipation. That's the key. Humans buying on anticipation, the higher it runs, the more likely you're factoring in that spot ETF. So I just want to mention that. For instance, let's say we go up to 37,000 or 40,000 or whatever, and then the ETF gets approved. I don't want to hear about anyone out there bitching about, oh, darn it, I bought at 42,000 on that initial pop, and now it's come back to 35,000, right? I don't want to, that's something that's a cardinal sin. You don't chase. You don't get caught up in the hype. Let's go to gold real quick, guys. Gold is looking like a beautiful, shiny metal that it is here. What do I mean by that? Well, basically, we had the breakout of the downtrend here, the down-sloping channel. We've gone up here. I was thinking we might have a bigger pullback down to here, and honestly, so far, I've been incorrect on that metric. I said it would consolidate. I just thought it would consolidate more sharply. Right now, this is like amazing consolidation. This is a classic bull flag formation. Now, again, it still needs to consolidate more, so it could pull back a little bit more. But like I said this even when we were up here. This is what I expect. I expect this, or I expect this, and then that. So this chart continues to shape up in a bullish manner over the midterm. It's just in this next 1 to 2 weeks where it's a little kind of, how does it pull back this much? Does it pull back this much? Or does it just go sideways and then again break out to the upside? That's what we're watching. But either way, the midterm outlook on the gold chart remains about as rosy as can be.
Bitcoin is on a tear, heading for the elusive $40,000 mark, stirring excitement in the crypto community. Anticipation of a U.S. Bitcoin spot ETF approval fuels this wave. This week, Bitcoin soared above $35,000 for the first time in 2023, with solid support at $33,000. The current price stands at $34,750, up 2% in 24 hours and 23.2% in a week. Breaking $35,000 is crucial. Success may set the stage for a $40,000 run, exciting Bitcoin enthusiasts. Investors are piling into Bitcoin, accumulating 103,000 BTC in the past 30 days, showing confidence in a coming bull market. The prevailing sentiment is bullish, with growing consensus on a U.S. Bitcoin ETF. Matthew J. Maley, a market strategist, notes another driver: global tensions. Geopolitical turmoil could hasten cryptocurrencies' adoption as essential currencies. With these factors in play, Bitcoin's journey beyond $40,000 seems increasingly possible. Whether it's the promise of a Bitcoin ETF or global events, Bitcoin continues to attract attention from a broad range of investors. Tesla CEO Elon Musk and U.S. presidential candidate Vivek Ramaswamy have cautioned about the increasing risk of World War II erupting. "I think we are sleepwalking our way into World War II," Musk said. Ramaswamy warned, "If we enter a major conflict, anything resembling World War II against a Russia-China alliance with potentially Iran and / or North Korea included on the other side, the United States as we know it will cease to exist." JPMorgan Chase CEO Jamie Dimon has identified nuclear proliferation as the most serious thing facing mankind. According to the United Nations, the risk of a nuclear weapon being used is currently higher than at any time since the depths of the Cold War. Dimon also pointed out that central banks 18 months ago were 100% dead wrong. Binance blasts CFTC for trying to be world's derivatives police, seeks to dismiss lawsuit. Let's continue our enlightening discussion with Gareth Soloway.
So this is the chart of Google. And again, what we see here is the drop on earnings yesterday after hours. The stock is trading down after closing around 139 yesterday. We're now down at about 130.5. Now, for me as a technician, I'm going to walk you through the process of how I analyze this to see if there's any trades for today's action. So right off the bat, I say, okay, it's trading around $130. Now I flip to the next bigger time frame, and that's going to be the daily chart. Now, when we look at the daily chart, what we see very clearly here is a trend line, right? There's a trend line here that goes from this point all the way through these lows here and right through here and right there. Now, obviously, what we're seeing here is this is around 132. So as of now, we've broken below pre-market. So that gives me a general sense that at least on a bigger time frame, this could be a bigger breakdown in Google. Now, it doesn't tell me about day trades. This is more just getting a sense and saying, okay, what is the overall picture on this chart? Is it still going to hold support on a bigger time frame, or is it going to break? And right now, based on where it's trading, and we'll have to see at the end of the day, but right now this is looking like it may break key support. Now, on the bigger time frame, that's going to take us down to some key levels. Eventually, it is possible to go all the way down to this level, okay? We're talking about the $100 even number. Now, you might say, holy cow, that's a massive move. But if we go to our weekly chart and we flip over to that, look at this. So this is the same trend line we were just looking at, right, with a potential break point. But now we zoom out on the chart and we go to this point here and we say, wow, look at that point. This is, again, from the COVID lows. So now you connect that and it connects perfectly through this low, through this low, through this low. And what this does is it gives us a general idea on a swing trade basis where this would start to look interesting, maybe even an investment basis. All right, so again, if we're breaking here and we're moving down here, here's 130 right here. So this would be where we are right now. On a bigger time frame, on a swing trade time frame, for me, I am not saying to myself, wow, this is a great swing trade on Google. In fact, I'm saying this could be the beginning of a bigger decline that could take us down to the $100 even number. Now, interestingly enough, that $100 even number, if you look at that upsloping trend line, notice these highs right through here, right? If we just bring those out, it's essentially at the same level. So if in the next couple months, Google were to flush from this level here down to $100, even number, upsloping trend line, flat top area of support, that would now give me a basis for a swing trade. Now, that's the first thing. The second thing is, well, what about a day trade? What about a short-term day trade? And what we do is now we flip back to the daily chart. And the reason I'm at the daily is because I want to kind of look for key levels. So number one, I see that we're, again, down here. Here's $130 right here. That's where we're trading at this point. So you do have some key support. Notice this high, these highs right through here. So this would be what I would classify as a high-risk level, meaning that the probabilities are okay for a bounce here. So for me, at least, that is the level that I would say would be the higher reward level as a day trade, not as a swing trade. Remember, we discussed down here is the swing trade level. This, to me, is the high reward, lower, and I say lower because everything has risks, but lower day tradable level. Now, again, for those of you that are cowboys out there, you want to try the 128 level? It might work. it might work. But for me, I'm a little bit more conservative. I'm going to wait on that.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.